Going, I guess? Yep. All right. Welcome, everyone, and thanks for joining us for a discussion of Bitcoin mining and its impact on the energy industry. Clearly, big crowd, lots of interest. A bear market sort of crowd. Anyway, my name is Travis MacDonald, CPA, CFA, CBV, all that fun stuff. I do CFO for hire work for charities and Bitcoin companies based out of Vancouver. And I'm joined today by Steve Barbour, who is the founder of Upstream Data, oil and gas services, and holds a number of patents, as we were just discussing, in that space, and works in helping companies, oil and gas companies, mine Bitcoin a bit, which we'll get into. And based out of Calgary with his wife and son there. So we're just going to have a bit of a discussion, and I'll be asking him questions about the space. At any point where anyone has any questions, feel free to come up to the mic or just raise your hand and someone will run a mic over to you so that we can make sure we get that for the live stream audience as well. So, all right. Actually, before we start, just a question for the audience. Who here has actually dealt with a Bitcoin mining or Bitcoin related company in terms of work and as a client or working with them? Anyone? We got one?
One person.
One?
Two. Nice.
Two? All right, great. So that helps as far as understanding everyone's kind of background on it. Thank you.
Another question, actually, I'm curious. I'm very pleased to speak in front of you today. I'm not used to this type of audience. My typical audience when I'm up doing panels or talks, it's either oil and gas, technical professionals, engineers, or the Bitcoiner crowd, which we all gather to worship Satoshi and the future of money and that kind of thing. So one question I have for you, just so I can gauge you, who, just raise hands if you think of Bitcoin in a positive light or a negative light. I just want to get an idea. Just think of opposite ends of the spectrum. If it's positive, raise your hand. Okay, so maybe about 50%, and the rest I assume is negative. So that's fine. I'm not here to preach the gospel of Bitcoin to you today. A lot of what I'm going to talk about is the fundamental technology, like objectively what it is, not so much like is Bitcoin the future of money. You can go to a Bitcoin conference to get, as we say, orange pilled around that. But I'm excited to go through some stuff with you. I mean, as for even that last talk, I thought was fascinating. I don't get to hear a lot of this side of the the world. I'm more on the technical side. But I run a business. We were just chatting. I just put in an offer to buy a business. I sort of did it on my own. I failed. I flopped. I didn't give them the right valuation. So now I know who to sort of go to. So this is pretty cool.
Yeah.
I figure since I'm probably going to I want to give you a bit more information on me. I run a company called Upstream Data. We're an oil field energy services company focused on the oil field. In 2017, I started it. At the time, I was an engineer in the oil and gas industry. This whole Bitcoin thing was just sort of coming to its industrial being. Like it was sort of a hobby before that. It was starting to become industrialized. And no one was really doing it in the oil field. So it's like, okay, this is really cool technology. And we'll talk a little bit about what it is, just so you don't, you're on the same page with us. But I started the company back then. It was just a one-man show. We're up to about 45 people, mostly manufacturing. It's a sale and service business. We did about 20 million in revenue last year. This year will be less because of the market's changed, but that's just a bit of perspective. And I guess I know your initial questions are going to be related to Bitcoin mining, so I'll maybe explain that.
I was going to say, yeah, if you want to kind of briefly explain what mining is, how it works, and
so, I mean, do you guys understand Bitcoin? I'm not going to get into it too much, but you generally understand it. It's a decentralized currency. It's mainly meant to be censorship resistant, that you cannot be stopped using it, right? It's really just a money. It's a digital money. Unlike, say, the Canadian dollar, it's a money that's produced through work, through energy, whereas the Canadian note used to be that way when it had, say, or the US dollar back when it had a gold reserve that you could equate it to money. So now it's a bit of a different beast because it's sort of, its value is derived in maybe a different way, like the network confidence in the money. But Bitcoin is a digital currency system. Bitcoin mining, think about it as the foundation of Bitcoin. Bitcoin does not exist without Bitcoin mining. It makes no sense without mining. A lot of these other cryptocurrencies, I'm known as a Bitcoin maximalist in the circles that I'm in with the Bitcoin space, which means that I only really care about Bitcoin. I don't care about the other stuff. I think it's all nonsense. That's just me personally.
Agreed.
But fundamentally mining, what mining really is we're basically, Bitcoin, the way it works is everyone's their own bank, as they say. And if you're all your own bank, how do you agree with each other? Because normally when I work with TD, they're my bank. It's a centralized, call it server. They have a ledger, and their ledger is the truth, right? Their ledger, what they say is in my bank account is the truth. I don't need to ask any other bankers or anything. Yeah. Bitcoin, it's like everyone's a bank, if you want to be. And the question is, well, how do you actually synchronize everyone's ledger together so that they're the same? Because they have to be, else you're going to have a market that's not going to jive. And that's what Bitcoin mining does. It synchronizes all of you, say if you're running Bitcoin, I am, it synchronizes everybody together to have their ledgers, my ledger, my software, updates real time with everyone else in the world, because we're not trusting, say the individuals aren't trusting each other arbitrarily, like you could say we do to a bank, because they're the central authority and there's laws around how they behave and stuff. We trust each other based on who does the most work. It's called proof of work. And that's why this whole mining industry has been developing. It's energy intensive. We have to compute to provide proofs of work. And that's fundamentally what mining is. It's basically just computing. It's an energy sink. And when you hear about Bitcoin, you mostly are probably hearing about it. It's bad for the environment. It's so energy intensive. I mean, if you're hearing about it loosely, like you're not in the industry, you're just hearing about it on the news. It's bad for the environment. It's energy intensive. It's
boiling the
causing
oceans.
emissions to go up. My company, and I'll get into it a little bit, is actually the exact polar opposite. We do insane emissions reduction. Probably, I would even say, I've said it before, in terms of dollars spent, the most emissions reduction out of any business in Canada because of how we target methane emissions. But I'll get into that a bit.
Yeah. Well, I guess to go on from there, then, like who is doing the mining? You're working in it now. Like, what's that industry look like right now?
Well, since I got involved in 2016, I was learning about it, and I started my business in 2017. The industry's grown immensely. It's a multi-billion-dollar industry. It's still a semi-small industry compared to a lot of the industries you guys work in, but it's been a rapidly growing industry. Might be the fastest growing industry in the world, generally speaking. It's reflected in the price, right? You've seen the price of Bitcoin over time. It's madness how it spikes and how volatile it is. In terms of players, though, I mean, when mining went industrial, away from the hobby mining, which was like the initial phase of Bitcoin, which was at home, it went industrial. China started dominating first. China is still the dominant player in the manufacturing, and so that's part of it. But China also has immense hydro facilities, and with hydro and with any renewables energy, which we're going to talk a little bit about, you have energy waste. You have curtailed energy that's not being monetized. And for example, if the demand on those hydro dams, and China has a lot of them, isn't at capacity of the dams, well, the rest of the water just flows down the river, right? So you basically have waste energy and cheap energy. So China early on dominated. Then it spread very rapidly around the world. The U.S. is really big. Texas is really big right now. A lot of you have a spectrum of like hobby miners. We actually build equipment for hobby miners. Like you can put a Bitcoin mine on the side of your house, that kind of thing. But we mainly focus on industrial. But it's now global. It's all over the place. The gentlemen that were up here last talked a little bit about like the global geopolitics with Russia and what's going on in that conflict, and how business in China seems to be trending a bit towards Russia. We're actually seeing that in the Bitcoin mining world too. It's sort of, say, capital has fled from North America, and we're seeing, and I know this from my suppliers, are doing a lot of business in Russia these days. These are Chinese suppliers doing business in Russia. And when you fundamentally think about it, like one takeaway on the technology side, if you haven't grasped this yet about Bitcoin, and one message on the tech side I hope you leave this talk today with, is that one amazing thing about Bitcoin is that it's a demand on energy wherever the energy is produced. So when you're thinking in your business, because hopefully we'll have some messages that help you in your business here, but if you're ever doing deals with energy companies, anywhere where there's power generation, there's opportunity, because there's always redundant capacity or waste energy, where Bitcoin actually makes a lot of sense. Because Bitcoin is a portable demand on energy. It doesn't need to be in a city where we all live demanding energy. It can be put right at the power plant. And what my company does, I build power plants, micro power plants for natural gas, which is waste gas, flare gas, vent gas. So, I'll talk a little bit more about that for emissions reduction. But you can put it right at the source. So it's a really fantastic, there's no other technology in the world that you can do that. Like data centers, like say traditional data centers that are feeding us our chat GPT stuff, it seems like that's a common thing that gets brought up all the time these days. But those kind of data centers, you can co-locate them at the energy sources, but those data centers need a customer, you, me, and we need uptime. Bitcoin mining doesn't so much need that. When you do a deal in Bitcoin mining, you don't have a customer. The network is your customer. They're always paying you market rate for your computation. It doesn't matter. You don't have to contract for them. So it's a really fundamentally cool thing where the Bitcoin mining, where you basically only need a supplier. You just need energy. The rest of it is just handled inherently in the network. You just got to plug the computers in.
Basically gives you a buyer of last resort there that will always take the energy and, will have a revenue stream off of it. So you're no longer dealing with, so going back to some of your comments on curtailment and that negative energy pricing, not really a thing because you could just mine Bitcoin with it instead of paying someone to take it.
Yeah, you can. I want to make sure you understand a bit about even my business, so how it, extrapolates into every energy industry. My business is all about oil field. That's my primary focus. I'm an oil and gas engineer. That's why, I'm developed the business. The problem in the oil and gas industry is you produce oil. Is anyone here working at all with Alberta, Saskatchewan oil and gas companies? A few people, that's great. You probably know a bit about this stuff, a bit about this problem. You have, when you produce oil, you're pumping oil out of the ground, but there's solution gas in it. It's like opening a can of Coke. You're gonna get foam and gas come off. It's exactly how an oil well works. A lot of oil wells, you can't economically get a pipeline for that gas, and hence that's why we flare it, right? So what we do is take this, what I established now is a portable demand on energy, put it at the oil well. Instead of them flaring it or venting it, venting just means it's pissing into the wind, and that's on paper anyway, 25 times, depending on how your methodology is, but it's between 25 and 80 times worse than its equivalent if it was burned, so like carbon dioxide emissions. So when I say earlier, and I say it proudly, and it might sound boastful, but my company and any other company doing what we do, if you look at what we're doing and the capital cost to deploy, say, one of my products on a methane vent, which is currently still happening in Alberta and Saskatchewan and across the globe, and look at and calculate, okay, it costs $100,000 to put that little Bitcoin mine on that vent, and how much methane emissions has it reduced, how much carbon dioxide tonnage has been reduced. I guarantee you compare those numbers versus any other project you've ever seen, and you'll see way more emissions reduction than anything you've ever seen. And it's extremely scalable. It's just put more capital, put it on more wells. There's really no limitations to it. There are some limitations, of course, but yeah, question. Carbon credits, if anyone in this room knows a good avenue to get into actually getting the value for the credits, please hit me up when I'm walking around. The way I do business, because we're a sale and service company, it's the oil company that actually owns the emissions, and we're not an energy producer. So what we do is we help them get the numbers they need to do their own internal reporting. Like in Alberta, there's a tier system. It's their version of the federal carbon emissions reduction mandate. And so I just try to help them do it, and what we tell them is hey, the credits you will get, and they do get credits, either actual monetary credits or more importantly, they reduce the reportable venting and flaring. So from an ESG, they're all doing it now, right? All these big oil companies, they have an ESG mandate or an ESG profile to their company, to certain goals, and it looks really good for them on their, because they get to reduce the reportable volumes that are being vented and flared. We don't, my company, I've never received carbon credits. I certainly, like I said, if you can help me out there, that'd be great. But we always just say like, hey, look, you own it, you're gonna get the credits, buy more of our stuff, work with us more. That's how we try to do it. That's another question. I'll repeat the question if.
Just so who owns with your technology you're capturing exactly natural gas? Or you own the Bitcoin miner? Is there like is it almost like a co-hosting?
Yeah, great question. So the question was, when we're working with an oil company, do we own the Bitcoin mining? Do we own the equipment? So I would say that when you look at the industry growth, there's a few decent sized companies. My company is very well known. We were the first in the world to do it. The industry's gotten very broad and some really great companies out there. My business generally, we do not own it. I'd sell it to the oil company, and I do want to just say we white glove it for them. Just like all your clients and you yourselves personally owning Bitcoin and the volatility, the regulatory stuff, which we might touch on, just the hair on it as a little tangly, in a corporation dealing with it is, they need certain services around that. So what we do, for those that buy the entire equipment, we white glove it. I basically just buy the Bitcoin off them real time. They get dollars. Yeah, but they own the equipment, they take the CapEx risk on that and the operational risk, and we service the equipment for them. I have another variation of our business model. Just because it's so hard to get, as you guys can well imagine, any company, any established energy company, whether you're on the utility like a power plant on the grid or an oil and gas company, to buy Bitcoin machines. So we also offer them options where if they just buy the generators, which is a normal practice for them, we'll supply the mining machines, and we'll do a power purchase deal. I call it a distributed power purchase agreement, because we can just buy their power wherever they generate it. We don't need any brick and mortar, facilities. So, yeah.
But essentially, so they can take a gas that they were flaring, that they were, incurring costs for, and turn it into a revenue stream without really taking anything beyond their normal kind of operations, machinery, equipment, that sort of stuff.
Yeah, and I mean, I've had these talks before with people that are sort of new to oil and gas, so I just want to make sure you understand how it physically works. You have that oil well with the gas problem I mentioned. They have to burn it. What my product is, so it's not voodoo, it's a natural gas engine, just like in your vehicle, fueled by the gas, makes electricity, powers the Bitcoin computers, connects to the internet, and it's streaming cash on site all day long. That's all it is. It's not rocket science. I just want to make sure so you guys understand what physically the thing is. The one thing I'll do it now because I wanted to make sure I emphasize this, again, because I'm trying to have some messaging here that adds value to you. In your business dealings, if you're working at all in the oil and gas industry, Bitcoin mining, as you guys know well, is still not treated, it's immature, right? It's not treated that seriously in a lot of industries yet, even in the energy industry. And I think this is an opportunity because oil and gas companies, they have a big problem with oil wells that are productive, they're assets, but they're rate limited. They can't produce as much oil as they should. They are shut in, so they're sitting doing nothing, not because it's a bad project, it's because they can't handle the gas. And the gas regulations are only getting worse. Like the venting allowance has been dropping. The flaring permits have been harder to get. So what happens is you have all these oil companies in Canada, US, and abroad that have assets that are on the books liabilities because they cannot monetize them. They have no way. The only way they can do it is to build a pipeline because they've been blocked from flaring. There's certain jurisdictions that won't even let you flare anymore, called routine flaring, where it's not something like a facility upset. And so the opportunity there is like, and I've always said it to the oil companies, and very few of them are willing to switch the mentality, but when you're looking at assets, about acquiring properties in the oil and gas industry, a lot of them on the books are liabilities because they can't produce them, but that's because they're not treating this portable demand on the gas seriously as part of their strategy to acquire these. Because you can buy gas properties or oil properties even for $1 because of the liability attached to it. But if you're willing to work with a third party like us, or even do it yourself, to monetize that gas, remove the emissions limitations, you get the oil back up and running, which we all need our oil. So that's one of the main things, like in terms of, on your side of the fence, in business valuation and opportunities, there's immense opportunities there to leverage a tool that you might not care about in terms of a sole investment like Bitcoin mining, but to leverage that tool to turn a traditional industry liability into an asset. So something to think about.
Yeah. And yeah, so I guess, can you,
Oh, gentleman had a question.
sorry.
So on a megawatt hour basis, I think in kilowatt hours. Like the revenue is based on the efficiency of the computer. I won't bore you all, but on a top end computer, you are looking at around 10 to 12 cents, I think, per kilowatt hour. So $12 to $15 per megawatt hour. No, that doesn't sound right. Sorry. Yeah, I'm an engineer. What am I doing here? But so that's gross. $120 odd per megawatt hour, and that's remember, it's not market limited. That's just the global rate. It's a free market rate. Now, are you going to mine Bitcoin at home at that rate? Not if you're living in my residential area. I do mine at home off and on when the rates come up and it makes sense, or if I'm prototyping like something my company's building, like a home mining product. But at that rate, we're paying more. Well, you're in Toronto, I hear you guys. Actually, I hear in Toronto, your energy's really, in Ontario, your energy prices are high. Is that true? Do you guys live here? Anybody live here? Yeah, I think your
Somewhat.
residential rates are high, but they actually just turned on this, like, if you
The
turn
overnight.
your overnight rates are like 2 cents. It's like super cheap. If that's true, you actually could just run a Bitcoin machine, program it to turn on and off when that price goes down, and you'll make good money here. But a little tip, pro tip for Ontario.
Anyone who wants to get into the hobbyist side of things, that's an option there.
That and the other thing I'll say that Bitcoin's volatile. That revenue per kilowatt hour is not just the price thing. The price could be sky high, but that could still be low if call it the supply of computation, everyone else competing with you, like any business, is sky high as well. And so like you sort of look at the historicals, and when Bitcoin pumps up, your rates pump up temporarily, but then the investment flushes in and your competition goes up, and then it comes back to a normal. What I've seen like historically since that industrial started in say 2016, the gross rate, like the gross revenue rates for the most efficient machines, like the new age machines, it's never really gone below about 7 cents. Because at that level, people have to shut off and their competition goes offline. And so it sort of stabilizes there. So from like a forecasting, just like we forecast the oil price, like where has it been, where is it going, what are the different risk factors and stuff. You do the same thing with Bitcoin mining, but you do it on what we call the hash price or the price per kilowatt hour.
And how does it compare? I know the mining at the site for the gas relative to selling to pipelines. I think I've seen you comment on some of those price differences.
Well, physically how it compares, Bitcoin mining, since you're running a genset, it has less restrictions on some of the requirements, like to feed it, like it runs on lower gas pressure. So it's actually, there's some simplifications. Like if you have, say, I have a bunch of customers in Pennsylvania. They have these mature, decades old gas fields. They're low pressure now. They can't feed into, they don't have enough volume and pressure to economically feed into the gathering systems. But they still have lots of gas left, and you can run these little rigs we build at low pressure. So from a physical standpoint, it's actually much simpler than gas compression and pipelines. The other thing is there's no pipelines. There's no sunk capital That's one of the big value propositions on why oil companies will actually buy our product. And a lot of them just want the product. They don't want the mining. They want that off their books, as you can imagine. So that's where we do that distributed power purchase thing. It's on my books. I have the risk on the machines. We have an agreement. We buy their power. But think about it. You're buying a genset. It's an asset. It's like a portable pipeline if you want to think about it that way. I usually describe it that way. And there's no sunk cost. Like you have some sunk cost in consumables and stuff setting it up, but there's nothing in the ground that you have to abandon. You just move it to the next site. So it's from an asset in an energy company's portfolio. It's quite a nice tool to have.
So no, I think that's been great to kind of describe how Bitcoin mining can be used to create value from stranded energy. Oh, sorry, did we have a question?
Yes, sir.
Oh, go for it.
So the question was, how much does it cost? I mean, what's the machine cost?
Oh, sorry.
And
Yeah.
if it makes sense in a residential setting with a solar power arrangement, if something like that could
Yeah.
be sort of still taken up and is still feasible.
Yeah, I mean, Bitcoin mining economics is always reasonably straightforward. It's all about your cost, your all-in cost. When people ask me about solar, your first question, how much does it cost? A new computer, for example, at 3.5 kilowatt, which is a lot of power. It's actually about 3 times what you're going to draw from your house. Like one machine will draw 3 times more than your home. Your electricity bill is going to go through the roof, right? I don't generally recommend a new person get into that unless you're really dialed in your numbers. But if you have solar, for example, it might make sense because you have certain reductions in costs, presumably with having that at your house. I've generally told people it's not something you would invest into solar to invest into Bitcoin mining. If you've already invested into solar for the reasons you have, then it might make sense for you.
So I think that's actually perfect. Thanks for that question. That as far as the home solar and all of that, but maybe if you can speak a bit to kind of how it also supports just the build out of new energy projects.
We should definitely touch on the renewables because
Yeah.
I know everyone's interested in ESG. It's a big priority for your business. Yeah, let's take one more question quick.
What's your sense of
Grab that mic there.
what's your sense of where the location of where the mining is happening right now? The reason why I asked that because we were talking about the geopolitical issues. With China, I think they had banned mining. I think I don't know, they've changed their position on trading in Hong Kong, I think. But, where is most of the mining happening? And do you foresee any other issues of other countries banning mining? And what impact does that have on the future of it?
Yeah, so a lot of that relates to regulatory uncertainty. I know that, like, as a Canadian, it's disappointing to me that a Canadian Bitcoin company, it's disappointing for me to see that we haven't taken a lot more of the business because we are so energy abundant. It is outrageous. Quebec with hydro, Newfoundland and Labrador with hydro. I'm from Newfoundland, if you can't tell. I got a slight accent. Alberta, Saskatchewan, BC, the natural gas. I mean, it's immense, and the amount of waste is immense in this country. It's unreal. It's sickening, and we should be the dominant player in the world. That's just my speculative, wishful thinking. In Canada, though, the problem is they've been pretty not that friendly to Bitcoin mining. Quebec put moratoriums on it. Quebec was really ramping up there back in 2017, 2016 timeframe with all the surplus hydro, but they put a stop to it. They put a moratorium on it. They wouldn't take any new bids for Hydro-Quebec. Alberta, the problem here too is carbon tax. Even though there's this funky thing where even though we are going out to the oil company, working with them to reduce emissions, and there's a net massive reduction in emissions on every deployment we do that's on a vent or flare. Not on a gas well, you're just producing more gas, so that's not gonna be an emissions thing. But on a vent or flare where it's already being produced, it's already being wasted, and then we monetize it and reduce the emissions. That's a net huge emissions reduction, yet the regulators, unfortunately, I've been trying to help them along, like, as a business owner, like encouraging them, like, we should revisit these rules. But some of the regs, if you generate power, they bucket that into this thing where you pay a carbon tax on it, even though we're reducing their carbon. So it's this wonky misaligned regulation thing happening in Canada, which is stymied. Like, the only reason this isn't absolutely exploding in oil field is for that reason. But as for globally, like I was saying, China they used to be like 80% of the network. Like, that was always the ballpark. Then they banned it, right? They banned it back in 2020, 2021. And my Chinese trading partners, who I buy some goods from, they used to accept Bitcoin from me, right? Because they're in the Bitcoin market, but they don't anymore because it comes with too much risk because of the ban. Rumors are that they're sort of coming a bit back in China right now, but I was going to say Russia is, and think about it, what is Bitcoin, right? It's censorship-resistant money. What happened to Russia when all this drama came up? They got sanctioned. Okay, they got sanctioned by the U.S. They got, and I'm not a
SWIFT.
I'm not a macro finance guy, but they got knocked off a lot of the payment rails and U.S. dollar rails and stuff like that. Well, that's financial censorship. What does Bitcoin do? It helps you circumvent that. Then what happened to Russia? They had that Nord Stream pipeline went offline. Okay, they weren't selling all that gas, that energy, to the customer that they had. It was shut down. I don't know if it's coming back or what the deal is, but what does that mean? Russia natural gas producers have a massive surplus, right, with no customer anymore. What does that do? It drives their costs down. What does that mean? Bitcoin mining is looking at it. Like, the Bitcoin mining industry, the private companies in Russia and China and other investors, they're going to the arbitrage. Like, wherever the energy is low price, they're going. And so you have, and that's an interesting example because you have financial censorship. And I won't say, I don't see any evidence yet that, like, say, Bitcoin is, like, filling the gap there in a big way, but I am seeing, and I'm getting all my suppliers say the same thing, they're doing a lot more business like my Chinese suppliers are doing a lot more business in Russia than they are in North America. But lastly, like, if you follow the space at all, Texas was a really big booming area. Contrast Texas and Alberta. Alberta's got 20 times Texas's energy reserves. Alberta's got as much or more waste energy. Why is Texas getting all of the investment? Multi-billion-dollar deals and big facilities and all this money, all these jobs. Why are they getting all that and Alberta's not, for example, or Western Canada isn't? It's because they have better regulation. Like, they have better clarity. It's not even better regulation, it's better clarity. More pro-business, no carbon tax, stuff like that. But Texas is huge as well. So.
Now, I guess just since we talked on Texas and the regulation there, that is one of the risk factors for, and kind of why some of these companies are not necessarily holding the Bitcoin themselves or wanting to own the miners, is there is kind of that risk factor of changing regulation, shifting sands a bit, especially in the States, as we saw recently with Texas and federally.
Yeah, I mean, any energy company, that regulatory risk factor is going to be a major thing, right? Like, do you want to invest, in a big project like $100 million in Bitcoin computers, like, when at any time the regs might swing against you? And we're constantly seeing that happen abroad. Biden, for example, it's sort of news in the Bitcoin world, but like, his administration is pushing in the US for a 30% sort of a targeted tax on Bitcoin mining because they're perceiving it as a negative, right? They're perceiving Bitcoin mining, I mean, you could argue they see it as a conflict of interest with the US dollar, with the world reserve currency. That's one argument. Another argument is they just see it as an emissions thing. It's bringing emissions up. That's largely what these administrations, how they view Bitcoin, and there's a lot of advocacy out there trying to show that it's not all additive energy. It's not all carbon addition. In fact, like, I could keep shilling my own company, but it was massive carbon reduction. And most Bitcoin mining, it's not necessarily additive, it's just taking on the waste, what's already happening anyway, right? What's already being emitted anyway. So it's not additive, but the regs are really, that's what makes it really difficult to do business with the energy companies, established, respectable, creditable, big energy companies, direct, is they don't want the risk of the Bitcoin machines. And the reason we've been successful in my company, if you contrast my company versus a lot of other companies doing similar, like, sort of things as we do, we've been really successful getting them to buy the product because we're offering them something that fits their facilities Like, it's not just a Bitcoin miner coming in looking for cheap power. I'm an oil field guy looking to solve their oil field problems. But then we do the white glove. Like, we offer them no risk on the Bitcoin thing. I'll eat it. But we do need some assurance, like on contract terms and longevity. Like, you'll feed me energy for a certain amount of time, you know, the basics.
Yeah.
But regulatory risk is a major issue. Yeah.
Switches topics a bit, but how are you managing the Bitcoin currency risk?
Yeah, the Bitcoin risk. Great question. So how's my company managing Bitcoin risk? I would say, like, well, I'll start with a personal level. I'm a Bitcoiner. Do I put all my money in Bitcoin? No, I don't have all my assets or money in Bitcoin, but I'm I'm one of the most hardcore pro Bitcoin people you will ever meet. And I still don't do that because I like a bit of diversity. I treat Bitcoin personally as a savings, and I'm saying this because I also run how I run my company is sort of related, but I treat Bitcoin only as a speculative savings. It's like a rainy day fund. I don't buy it right now to go buy stuff. I buy it as an investment, as what I hope to be a savings, because I think it's strong, fundamental monetary technology. Now, how does my company do business? We have a different need. We do a lot of sales in the US. Actually, most of my business is in the US. I ship most of my product to the US. Canada and the US is really my only two jurisdictions outside of some niche stuff we just ship abroad. So I get USD come in, I get Canadian dollars come in, and I get Bitcoin come in. We don't discriminate. Anyone wants to pay us in any form of currency, it doesn't matter. And then we get Bitcoin coming in from our oil company clients who we're working directly with, because we also work with third parties like distributing equipment. But at the oil company, we're buying their Bitcoin off them all the time. So I'm always depleting every month, depleting my fiat, my Canadian and or Bitcoin balances to buy their Bitcoin. So my Bitcoin treasury is always going up. And I always have to keep balancing it. I always have to offload Bitcoin to top up because I got to hit payroll and all that stuff. You know, you got to pay your people. And so I have to do that. So really, I treat it like I don't speculate. I don't go out and like, oh, it's a good time to trade. I do just like any forex, you know, like managing your treasuries. Things might look okay on a USD rate, and I might change some over to Canadian. I might do the same with Bitcoin. I learned the hard way because I've never ran a business before this. So you know, like a lot of you, like you just dive in, and you know, I'm learning as I go. And there was definitely a period where I held too much Bitcoin. I got a little more, maybe over enthusiastic with it, and I didn't have a real strategy call it a treasury management strategy. And just, what's that?
A hedging program.
Yes, a hedging program. I didn't have a hedging program. I still don't really have a hedging program. I more so just try to keep a certain level of a total, like say, dollar value. Because I don't want to deplete a lot of companies will deplete their Bitcoin and just keep the dollars as it's safer. It's not as volatile. But then you don't get the upside speculation on it going up. And one reason why I did our business is because I think fundamentally it's a great technology, and I want to speculate a little. So I'll always keep a certain amount, but I'm always budgeting for several, you know, periods and different volatility in our business sales, and I try to manage it so I always have enough of a cushion of stable money to meet that need. So I'll just say there's nothing that fancy that I do. Yeah. Another question. This is great. Thanks for the questions.
No, just curious, because I have dealt with a lot of Bitcoin miners, and obviously the economics on mining uneconomical.
Yeah.
With perspective, halving and difficulty increases.
Yeah.
Like we saw that it wouldn't really correlate the last time around, right? Where difficulty was increasing and Bitcoin was increasing, and then it wasn't.
Yes.
So, like, you've effectively hedged against that because you're not buying the power? Like, your cost of running is just access to getting
So
or an equipment?
yeah, I'll just sort of restate a bit of what you said in case you guys didn't hear it. Like generally, Bitcoin mining economics is tight. It's all about energy costs, really. The OpEx is the biggest thing. There's a lot in the CapEx too, but OpEx increasingly is more important over time. Right now, you know, Bitcoin, the newest machines, like I was saying earlier, might gross like, you know, 9 to 12 cents, somewhere in that ballpark. So if you're like OpEx and you're all in overheads and everything, you're at like 7, 8, 9 cents, like it's not a viable business. When you look at one reason why my company is still around, in this insane volatile market that Bitcoin is we're going after liabilities. We're not say contracting with power companies just to buy power at a little bit better of a rate, which say everyone's doing, like in Bitcoin mining. I'm going after energy producers. I'm bypassing all the middlemen. There's no distribution people we deal with. I don't talk to utilities. I only deal with generators, and we only work with the ones that have a problem. If I can't solve your problem, there's no need to work with me. I have nothing for you. So I go after how I and my company deal with it is simple. We look for your liabilities and we help you turn them into assets. So when you evaluate my product on your property, for example, we have a unit economics of just buying my stuff. It mines Bitcoin. What's it gonna gross? What's the OpEx and how does it pay out? Well, it's about, you just buy my machine, it's gonna be with all the computers and stuff, it'll be like 2 to 3 year payout on a unit, with some reasonable assumptions on cost, depreciation, all that stuff. However, if you account for what it's also doing for you, allowing you to run your oil well, or your rate limited, project, what is currently a liability, or maybe there's carbon credits or carbon emissions reduction aspect, like reducing flaring and vent reportable rates. That's immensely valuable. So when you take the unit economics plus the added value, it looks pretty good. And that's why we're still competitive in a market that's so competitive. Guys, there's no market in the world more competitive than Bitcoin mining. And maybe restaurant business, that's a tough market too, right? There are really, really difficult low margin businesses to be successful in, but just remember, Bitcoin mining, you plug in a machine, you're competing with everyone in the world. A restaurant, just to compare and contrast, you're competing with really only your locale. Still really difficult because of, say, the barriers to entry, are also, say, low on the restaurant business, but yeah, Bitcoin mining is intense, and that's why you see a lot of, you don't see a lot survive. You see these boom busts, money floods in. If you guys were at all paying attention to Bitcoin in 2020, 2021, it was madness how much money was flying in and valuations companies were getting. I should have raised money during the time. I'm just too conservative, so I'm just interested in selling stuff, so.
Sorry, then you would have had a down round or something afterwards, and
Yeah.
valuation falls off. It's tough. So I guess, I think we've to get back to the green bit, just again for the ESG and stuff, but I think we've spoken a lot about how it, can turn a liability into an asset, but maybe a bit about how it can, essentially just boost the value of some of these assets and create that demand as they're getting online and kind of help pull that cash flow forward a bit.
Who here is working, I asked you about oil field, we had a few people with experience in doing business in oil field. What about renewables energy? Anyone into that? Yeah, a few people.
Few.
So wind, solar kind of stuff, or geothermal? Well, as you guys know, any power generation whatsoever, if it's a natural gas engine, a diesel standby, coal power plant, nuclear, whether it's microgrids or macro grids, the operators and the planners are forecasting demand. They're sizing power plants to accommodate that. And what are we all doing? We're oversizing. We're not undersizing. We're making sure it's oversized, that it's going to meet that demand. Any say even oil and gas facility, and I'll talk a little about wind and solar, but if you're going to run generators to run your plant, you always have a +1 redundant, and we say N+1 generation. You always have one engine sitting waiting in case you have a maintenance event. In solar, you're generally, you have, solar of course, sun shines, power generates, comes down. You often have oversizing of capacity as well, because it's not just in a broad sense, because of course the problem with solar and wind and some of these renewable sources is that the demand curve doesn't match the supply curve. They don't just switch on when you need them. They're there when they're there, and if it matches demand, great. If demand's not there, you have a surplus. You always have a surplus. And a lot of that, the more we build out wind and solar, we are actually still needing to build out some reliable base load or something, some kind of energy storage to manage that differing demand and supply. But what we're seeing a trend in is a lot of, and some of you guys will know more about this than I, because I haven't built solar projects, but when you're building these renewable projects, you start your build out, but you also need all the permitting and the tie-in. That takes time. We've worked with, and I've sold equipment to a lot of people, a few folks anyway, that have put our Bitcoin mining infrastructure temporarily at these projects so while they're waiting for the tie-in, because they're ready to go, they're ready to sell power, and it helps a little bit on the economics to get them running, because they know they have a demand. There's going to be a Bitcoin mine there. They might use some older hardware to keep the capex down, but it's still a pretty good value, like a pretty good steady state customer for the power while they're waiting for the project to get tied in.
Cash flow they wouldn't have otherwise had, because there's no one to sell that power to.
Yeah, we just sent 2 megawatts of buildings down, Bitcoin mining buildings. We call them load centers, sort of like data centers. It's just they're not computing data. They're not like a data processing thing. They're just generating a load. So we sent 2 load centers down to West Texas, not for oil field, it was for wind. They have an immense amount of wind down there. A lot of it's being curtailed. So it helps the wind project. There's nuance to this. Like it doesn't mean Bitcoin's gonna, like, some people, I disagree with them in my community, will say Bitcoin is gonna be a renaissance in renewables, because it's a demand on this energy that is being curtailed. I won't get into why, but there is nuance there, but there is opportunity. And if you have a wind or solar farm and you're curtailing, well, it makes a lot of sense to at least evaluate co-locating a Bitcoin demand at that site. And we've built plenty of projects for those customers, because our products can just sort of fit wherever you have energy, it doesn't matter. So we have a wind project going on now with a customer down in Texas. But it just sort of adds, it's a value add. It doesn't take away, it's just a value add to those energy projects. It's a little more cash flow, a little more, it's a completely different market too. Like, because if market rates spike, as they do, especially in Texas, they have their own, Texas has its own grid and its own demand response program. And when the grid is stressed, everyone's air conditioners are on in the summer or something like that. Or say a couple years ago in the winter, they had snow in Texas, like, and they can't handle it. Like, they can't deal with snow down there. So a lot of their power infrastructure went offline, like gas pipes froze and stuff like that. They weren't prepped, right? Because they're not a Canadian climate. And this freak snowstorm and cold wave hit them for a long time. And they have this demand response program down there where, market rates swing high because not enough supply, right? In which case you wouldn't mind, you would switch over let's say you're a peaker plant or a wind farm, it doesn't matter. Say you're selling it to a Bitcoin miner, you might be the Bitcoin miner. All of a sudden the market rates spike because of stuff's happening, you just turn it off, whatever. Switch it over, you're making more money now selling to your normal customer. So it's sort of like this wonderful thing for generation technology. You see a lot of it on the mid-grid, like sort of at utility, like on utility contracts and I mean every grid has different regulation. Some of it's deregulated and you work directly with power plants. But fundamentally, it should be at the power plant, because the power plant can always just send the excess that it can't sell to a Bitcoin machine. And one thing too, like I don't get a lot of love on this because it's helping coal, but like even coal plants, just think about it. If you're a coal plant and you need to be running, I know people want to shut them off and stuff, but okay, but it's running and you have to feed the customer as reliable backup while they build something cleaner, say like nuclear or natural gas or some other reliable base load. If you're stripping down like all your coal plants, like we've eliminated them in Alberta, but let's say you still have them running, and you brought in all this sort of more unreliable power, and the power's on, well, the coal plant is gonna turn down. But what happens when you turn down a coal plant? If you don't run the coal plant at nominal capacity, your heat rates get way worse, meaning you're burning more coal per kilowatt hour than you would otherwise be. So there's even like for existing coal plants, and I know the argument is, well, you don't want to help them, but at the end of the day, if you help them to stay profitable while they're being phased out, if that's the goal, it's just another way this portable demand on energy is helping.
And anyone who's got them in their portfolio is fine with helping them as well. So
yeah,
there's someone out there looking for that. And I think I've also seen stories of just in building out new grids and stuff where it's, you know, you might not have that demand initially, but you can create, you know, put in a facility that, like you said, is oversized, especially relative to the standard demand, you know, that so it can serve peak, but then as the grid gets developed and everything, you've kind of got that buyer of last resort in there that can just, like you said, it's portable, so you move them to the next facility as you go. So it's kind of buyer of last resort, giving you a bit of a floor on your pricing there, and kind of reducing the risk of some of the volatility in selling to the grid. So
It's a guaranteed customer.
Yeah.
Like I said, it's fun. It's great because they never complain. They just keep streaming. If it's your own machines, there's no one to complain.
yeah, so higher cash flows, lower risk. So as far as the valuation crowd here goes, you know, that should provide a boost to kind of any energy project where this could be used. Maybe if you just speak a bit to kind of overall, like the impact on just, I've heard you speak a bit before on this, and you talked to Marty on TFTC about just the efficiency of the grid and kind of the impact that has, because I know you've referenced it even in just, you know, in making the oil and gas more efficient, there are these things that, you know, it helps pricing overall and the ESG anyway. If you can maybe speak a bit to that.
Well, I see it as what Bitcoin really represents it's an efficiency technology. It's only being applied in places where, you know, it economically makes sense. Any grid, micro, macro grid, any big grid like we're being fed by here in Toronto, or any microgrid like I build in oil field, like I was saying, you have sunk cost in capacity, you have overcapacity. Alberta, for example, has a lot of overcapacity because we overbuilt our grid. I believe when I was talking to a rep at ATCO, they were talking about how basically Alberta was projecting certain demand. COVID hit, that's a reduction in demand on stuff, and therefore a reduction on energy demand. And so we ended up, I think a lot of projects came online, but there was a low demand. When you have overcapacity, you have sunk capital, right? It's in the iron, it's in the equipment that's there. More was built than was necessary. When I first started my company, I did a talk for Fidelity Investments, which was actually put me on the map because they found me on Twitter, brought me to their conference in Boston. I did a talk explaining sort of what I'm telling you guys today, just a different focus. And at the time, I remember telling them, like, you know, we have the oil and gas industry in Canada and abroad contracted. We have so much engines, natural gas engines just sitting there. They're literally rusting. Like, they're sitting in yards rusting and depreciating. And I'm like, this is all sunk capital, right? Then you got all this energy waste, like operating waste. So you have CapEx waste in the equipment. You have operating waste in the energy, just being wasted and invented and blah, blah, blah. And so, you know, we're able to help them put the assets you have that are idle, doing nothing, to work on your gas that's doing nothing for you to work. And that extrapolates to any energy system, whether it's overbuilt hydro. I mean, China is famous for overbuilding things. They have, you know, especially in real estate, you see those videos of towers never being occupied and then getting knocked down and stuff because it was just misallocation of capital. But you're seeing that across the energy space as well, with hydro being over excess capacity. You have all these peaker plants that are just like, you know, the economics, they need prices to spike to justify coming on. You can basically put at least a partial base load there to help, you know, improve the economics of these. I just loosely call sunk capital in capacity and assets like that. So I mean, it broadly speaks to any energy industry, but again, focus on power generation. So I'm just hoping that at least educating you guys a bit more on this, like maybe in your business, when you're working with clients, or, you know, the opportunity is at the energy source. That's where the arbitrage is. It's working with the people producing the energy or generating the power. That's where there's going to be, you know, if you're willing to use this tool creatively, you can, where everyone else might be treating a liability, you might be able to turn that into, you know, an asset.
I guess with that and kind of the added efficiency it gives to energy companies and all of this, like I guess as we're kind of getting to the last 5 minutes here, where do you see, I've heard a bit about this, but where do you see the industry going kind of in the future with power companies getting into this, or the Bitcoin miner companies trying to vertically integrate and get power directly? Kind of how does this maybe play out?
Well, the thing about, I mean, where is it going? Where is the industry going?
Crystal ball.
Yeah, I do have a crystal ball, I like to say, but it really hinges on regulation, which is strange to say as someone who's all about Bitcoin. Like, I'm worried about regulation. Well, regulation, if it's over-regulated, like, they're proposing a very onerous targeted tax of like 30% tax in the U.S. Well, that's going to really kill it, the opportunity there. Regulation will have a major effect of where it propagates, the industry propagates. And the thing about Bitcoin, of course, it's not just like, because it's money, because it's competing with the U.S. reserve currency, the Bank of Canada's, ability to print and stuff like that, because it's competing with that, it's political. Like, there's just no way around it. And so there's going to be, so that's why I mean, like, the regulation, where that goes, it's hard to say. I think the people interested in maintaining, say, the U.S. dollar as a reserve currency are not going to be interested in helping Bitcoin along. I mean, that's sort of logical. So will they allow for pro-regulation for Bitcoin? And, that's where the politics and uncertainty come in. If you stripped away the uncertainty on the politics, which I don't think we can do, I don't think we can take that risk off. If you strip that away, though, and let the free market do its thing, I think that you would see a continued trend of power companies doing it themselves. And the trend is already happening. Like, there's a company, for example, I have a friend over there, he works for Talon Energy in the US. They run nuclear power plants, I think renewables and gas. They're mining Bitcoin, self-mining Bitcoin. They're an energy company, power generation company that is doing it themselves, right? So I'm trying to acquire them as a customer. Like, that's what we target. I think my company's been really successful getting oil companies to do it. I'm finding them retracting, though. Like, some of my customers who were buying our mines and the computers, so they own all of it. They're self-mining. They're taking that risk. I am seeing them step back a bit because they can't handle the volatility. Like, they bought it on the upswing. Things were going awesome. They kept buying more. Then it retracted very quickly, right, with all the FTX scams and all the scams get imploding and all the shenanigans that happens in cryptocurrencies we all see. And so all of that put a bad taste in their mouth. So I'm seeing personally less interest in the customers we already have, for example, continuing to invest in the servers, like in the machines. But the tool that it represents, they're still interested in it. They just want a different structure where they're not taking the CapEx risk on that. And that's why, like more recently, we're shifting a bit of focus to like power purchase agreements. We'll just more traditional things for them. Get it off their balance sheet. Get the volatility risk away. It might be a lower payout, but the risk is off their books, and that's what I see. But you're seeing a trend, and naturally, whether it's the power generation company themselves doing it, like their shareholders doing it, or they're just working with a third party. The trend is what we say, it's moving upstream. It's like the name, why we named our company that way. It's moving upstream to the generation. So it's not like, you're not going to see home mining. Home mining, and this is the kind of stuff I talk about at Bitcoin conferences, but like home mining makes sense if they censor the industrial mining. Like, if they don't allow it, which they have the power to completely do that. I mean, we all have to operate within the law. So if they shut me down industrially, the home mining crowd will just do it. So when I say like where it's going, it's really a function of regulation, and a lot of Bitcoin people would slap me for saying that, but that's the truth.
I won't tell them. I think maybe then in El Salvador that happens, because there it's legal tender, so it's
you're seeing like countries adopt Bitcoin, like El Salvador. If you read about Bitcoin at all, they've done a lot of like pro Bitcoin adoption. The thing there though is El Salvador does not have a money printing machine.
No.
So it's not competing with their primary monetary position and its strategy. So
right. Well, we're down to 10 seconds on the clock, so thank you very much, Steve, for talking on this. And anyone who has any questions, feel free to just find either of us.
Thank you, guys. Thank you very much.